Today, we're going to talk about whether we're heading for another housing crash. Here's how I see it. One of the reasons we're not heading for a housing crash is because today's market is nothing like it was in 2008. In 2008, we saw that anyone could get a loan. So it didn't matter what your credit score was, you could get a loan. Now it's harder to get one because lenders are being a lot more careful. This graph shows you that loans with a credit score below 620 are not getting loans. And that was not the case in 2008. Last time we had an oversupply of homes on the market. And now guess what? We've got very little to no inventory on the market. In 2007, we had about 8.5 to 9 months worth of inventory on the market. Today, we're barely at 1 month of inventory. And that is across the board in the Bay Area and nationwide. Today, the foreclosure situation is very different. As you may have heard, we have a lot of money in the market, and that's what's causing inflation. We've got a lot of liquid cash and people are using it. The amount of foreclosures or people behind on mortgages in the Bay Area is very, very low. 4 years during the housing crash in 2007, starting in 2007, we had millions of people who were in notice of default or in foreclosure. Now, in the last 4 years, from 2018 to 2021, we are seeing less and less people who are behind on their mortgages or have not made a mortgage payment, which means they're not in foreclosure. Everyone is current on mortgages, or the majority of people in the Bay Area are current on mortgages, and we are unlikely going to see any foreclosures. Again, that brings us back to inflation and having a lot of cash in the market. If you're concerned about a crash and you're wondering, hey, what's happening? Russia invaded Ukraine. Are we headed for another war? What are we going to see in the market? Is that going to mean I should just wait and hang tight with my money and wait for the market to crash? I don't think that's likely. What we are seeing is that the federal government is raising rates, which means your buying power goes down as rates go up. If you like this video and you found some good golden nuggets, feel free to like and subscribe, and see you in the next video.